Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday after the previous session's key reversal down. This time, the market not only extended its move down below the purple lower time, currently at 111.88, of the late June to very early August bullish Andrews pitchfork, as well as below the important cap of the dark blue neckline, currently at 111.47, of the January to February 2021 reverse head and shoulders neckline, but also closed below, for the first time, the bright green lower time, currently 111.12, of the newer start of August to mid-September bullish shift pitchfork. Prices ended up, of all places, closing on the old broken upper bear channel line, currently at 110.63, dating from late August to mid-September. The market seems no longer that reluctant to venture down towards the bright red slowly declining head and shoulders neckline below, and that's of the July 2017 to November 2018 move, currently at 109.84. If this proved to be the case, well, then we might just have a double top formed here since mid-August to date. It'll all depend on what prices do should they get down to the bright red neckline, as we can regard that as a proxy for the neckline for a double top. Oh, and by the way, I think it would be an even eve double top. Now, so far today, not much, holding around and on top of the broken upper bear channel line and well within yesterday's range. Cable, aka sterling against the US dollar. A bearish engulfing pattern yesterday, if only just, which wasn't really that hard to do as the previous session was an indecisive spinning top. There were two notable features in the day's actions. The first was the large move down and close below the dark blue middle time, currently 133.47, of the late June to early August bullish Andrews pitchfork. And this move stymies the full opportunity, though has not negated the idea of the early August to date bullish halfway hesitation. We've just not managed to reach its full potential on the top side. The second feature relates to the first, and in that the large move down punched down through and closed below the bright red lower time, and that's currently 133.79 of the more recent and quite acute early August to early September bullish Andrews pitchfork. Now, I may finesse this pattern next time into a shallower bullish shift pitchfork for the same move. And prices also pushed down through some March 2022 congestion at 132.98, the August 2024 high at 132.65, and the interesting 61.8% Fibonacci line of the June 2016 to September 22 move at 132.46, but only managed to close below the first of these. And so far today, well, the market is bracketed between a congestion at 132.98 and the August 2024 high. But right now it's testing that congestion at 132.98. Euro sterling. An ever so slightly lower indecisive spinning top yesterday that could also, I suppose, be seen as a reactionary bullish harami, if only just, after the previous session's immediate countering combined key reversal down and bearish double. The shadow of the narrow, previously broken though still influential, recent August-based descending wedge pattern, currently 83.12 to 83.45, is still being felt here, as is the overhead congestion at 84.05, dating from August 2022 low. Now, further up, we have further congestion at 83.86, which was responsible for this past July's low, 83.81. Now, further down, we have congestion from the February 2020 low, 82.79, the whole of the 2020 low at 82.74, and then the interesting July 2016 low at 82.47. This low is interesting as it is right now the home of Target X at 82.50, the target for the August to date bearish halfway hesitation. So far today, a test up to the August 22 low again, but also rejection, and prices have moved back down to within the well broken, but as I said earlier, influential descending wedge pattern. And around yesterday's close, so looking like an indecisive doji cross at the moment. US dollar against the Japanese yen. Interesting in its own way, I suppose, an interesting indecisive doji cross yesterday after the previous session's immediate countering bullish harami, which in turn was a reaction to last Friday's very large combined key reversal down and bearish engulfing pattern, if only just on the latter. Support came from the combination below of the bright red broken and now possibly repaired lower time, currently at 141.95, of the shallow December 2023 to early August 2024 bullish shift pitchfork, as well as the August 2024 low at 141.66. Further down, we have the interesting and seemingly better equipped support of the 38.2% Fibonacci line of the January 2023 to July 2024 move at 140.48. Meanwhile, topside, well, the 50% Fibonacci line of the January 23 to July 24 move at 144.58 capped the market. Two things now to think about. The big picture question I'd previously been posing of whether the action since the high in July to date is a bearish halfway hesitation, well, that is increasingly looking less likely. But the market does not offer an alternative just yet. The second thing is that I have drawn a somewhat prospective mid-August to late September bearish Andrews pitchfork to perhaps shed some light on the situation. This pitchfork is not highlighted as I'm not wholly enamored with this one, and I would finesse it into a shallower bearish shift pitchfork for the same move or retire it completely, all in a heartbeat. So far today, well, a small move higher, but still well within yesterday's range, though seemingly eyeing the overhead 50% Fibonacci line at 144.58. US dollar against the CNH, the offshore Chinese yuan. A third bullish white soldier yesterday and a continuing follow-on higher from the recent combined inverted hammer pattern and bullish piercing line pattern. Prices reached up and were capped by the first decent piece of resistance we have overhead, and that's the 50% Fibonacci line of the October 22 to January 23 move at 703.61. Additionally, nearby we had and still have the dark blue upper bear channel line, currently at 703.83, of the broken but seemingly repaired August to date bear channel, which is currently 696.70 to 703.83. Further up, we have the June 2023 low at 706.57, whilst below we have congestion at 796.62 and 795.62. So far today, well, a reasonable range, but it's all still within yesterday's range right now. US dollar against the Mexican peso. A second bearish black crow yesterday, with the action having a passing resemblance to a shooting star pattern type 1 bearish, but not good enough to be called such. Prices were capped by the congestion overhead between 1987.75 to 1991.31, containing the December 22 high at 1991.31, and on a closing basis by resistance at 1979.14 and the April 2022 low at 1971.68. Below, the market still rode along the dark blue lower time, currently at 1960.93 of the recent mid-August to mid-September bullish Andrews pitchfork. This is a nascent pattern, and I'm quite happy to finesse this to a shallower bullish shift pitchfork or even retire it completely if market actions demand it. Looking below, we have support at the 2021 low at 1953.63 and then again at 1940.68. However, the big picture item here is still the bright red April to July bullish shift pitchfork, and we are in between the lower time below, currently at 1923.33, which is still enmeshed with the short medium moving average, currently at 1921.83, and then the middle time above, currently at 2024.58, which is now above the recent high of this market, which was at 2015.20, made back in early September. Now, so far today, On the face of it, a somewhat indecisive action, but the market is challenging the dark blue lower time, pushing below it and slowly testing down towards that 2021 low, which is interesting.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.